How you guys doing? This is Nader with Nader Accountancy. Back from a long hiatus, I know, but here I am. All my work's done for now. I'm back providing videos, making content for you guys, trying to enlighten the people on tax like I love to do. And in this video, we're going to be going over estimated taxes. It's for content creators, this video, but it can be used for anybody in any business. I'm going to try to demystify a little bit. I know it can be confusing at times. I've read some stuff online. It's kind of conflicting. It uses some tax jargon. I'm trying to make it simple, easy to understand, and concise. So let's get into it. Okay, the assumptions for this video. We're going to assume they're a content creator. Doesn't really matter, but just to make it more realistic, I guess. They made $25K in the first 3 months of the year. They're going to be filing single. He or she or they, I could just put they, I guess, too. They're going to be making the same each quarter, so $100K at the end of the year. They're going to have one small expense just to kind of make it more realistic, and you're going to use the QBI deduction. I've explained that in another video, in my OnlyFans video, in more depth if you want to look at that video. They'll be taking the standard deduction, and they're paying their Q1 estimated tax. How are you guys doing? You're probably wondering what happened to my suit and what happened to my hair. What had happened was I was rewatching the video from yesterday, and it became clear that I want to make it very clear now before you see the rest of the clips and the rest of the video that I'm only using these forms, the end of year forms, to help visualize and to annualize and to calculate the numbers that we're going to need for our quarter. You're going to see me multiply some numbers by 4 and divide by 4. And the reason is because we're only a couple months into the year for the hypothetical sake. So we have to annualize and project our numbers because we need to project what our tax will be. So it's purely for visualization purposes. None of these forms are going to be submitted to the IRS. You're just submitting the payment at the end. So they're purely just to help visualize and to see and to help calculate. Hopefully that helps explain it a little bit. If not, go to the comments and I will answer it immediately. Thank you. So now getting to the actual calculation of things. Remember, guys, how I said we made $25K in that first quarter? Annualizing that, I mean, there's 4 quarters a year, multiplied by 4. So 100K. It's pretty simple. So now here's where it gets the calculation side of things and get the forms involved. So we go to Schedule C, profit or loss from business. Remember, this is a business. We don't have an employer in the traditional sense. They don't take the tax out for us. Twitch knows how much we make. They take their cut and they send us this. Okay, well, you guys made this much. Here you go. Usually they give you a 1099. We don't have it because it's quarterly. At the end of the year, they give you the 1099. During the quarters, it's up to you. You know how much you made. You can probably track it. I imagine you can track it in the website. They have a way to check, and you report it yourself. So we go here, profit or loss from business. Line 1. So I'm assuming 100K, remember, pretty simple. I don't want to assume too many expenses and do all that. I'll assume we spent 5K on advertising. And we annualize that. We're assuming we're going to spend 5K throughout the year on advertising. So simply, our profit from the business is 95K. That's how much we made. So from there, we go to Schedule SE for calculating self-employment tax. Now on line 2, you can see how it says from Schedule C, line 31, which is where we just were. It goes to this Schedule SE right here. And then you multiply that figure by 92.35%. You do that because when you're an employer, you don't pay the full amount. You only pay half of it. You pay just for that half, and the employer pays the other half. So this is kind of to get a little parity, make it fair for self-employed people. So that leaves us with $87,733. And then from there, we go down, and we go to line 10. Which says you multiply the smaller of line 6 or 9 by 12.4. Line 9 is the limit on self-employment subject to Social Security. The limit is $168,000. We're under that limit, so our entire amount getting taxed for that 12.4%. So that gives us $10,879. And then we're also multiplying line 6, which was our 92.35% times our income, times 2.9, which is for Medicare tax, which gives us a total tax of $13,423. That may have seemed like a lot of words, but in reality, this stuff is all done by computers now. And software, humans don't really calculate that stuff anymore by hand. This isn't the 1950s anymore. We have computer, we have technology. But moving on, so we take our self-employment tax total of $13,423 and we multiply that by 0.5 because we're able to deduct half of that on our tax return. Now, I keep saying tax return, but in reality, guys, remember, I'm just estimating it what we think we're going to pay for the year so we can get an estimate of what to pay for the quarter. I'll explain that part at the end in more detail. So moving on, I can show you that. Here's our Schedule 1. Here's our where we have our additional income because we're not an employer, no W-2. So our Schedule C income goes here of $95,000, and there's our half of our self-employment tax that we're able to deduct as well. So the last form I want to cover is the QBI deduction. And this part, you put your business name. I just put that, and we have our income from Schedule C of $95,000, and we go down here. We just have the one business, I'm assuming, of $95,000. There is a limitation on QBI, but we're under it. It's this number right here, $191,000 if you're filing single. And then we can ignore this part. This line 11 right here, I can show you how this is calculated. It's from your 1040, the $73,688, and it me zoom in so you guys can see this. It's pretty small. It's your line 11, which is your adjusted gross income, which is simply in this case your Schedule C income of the $100,000 minus the $5,000 expense, $95,000. Also, what we just covered minus half of our self-employment tax of $6,712. That gives us $88,000 number, and then line 12 adjusts our standard deduction for 2024, which is $14,600, and that gives us this $73,688 figure you see here. That gets multiplied by 0.2, which is 20%, and that gives us our total QBI deduction, and that is also carried to our 1040 on top of the things we just covered. So we can subtract 14,738. We add up our deductions, and that leaves us with our taxable income of $58,950. So remember, this gets thrown into the, you guys see like these tax brackets. This is also computed a certain way. I can explain tax rates in another video, but assume I'm telling you the truth. Our tax on that is going to be $8,028. So you do that tax on your taxable income on top of your self-employment tax of $13,423, which gives us a total tax of $21,451. I can unhide this. And then simply we divide that number by 4. So our exact tax for Q1 we need to pay is $5,363. I like to round up a little bit just to always want to err on the side of caution. We'll get a refund if necessary. $5,400 what we're paying for our Q1 tax for a content creator, anyone of the sort. To round out the video, we're here, pay1040.com. Honestly, it sounds like a scam of how simple the name is. We're doing our personal tax, not business. We can do that in another video if necessary. Pay your personal tax, category personal, we just said that. Tax form, 1040 estimate, yes, 2025. Payment amount, we said $5,400. Within the U.S., so we're living in the U.S., we assume. Hit next. And then from here, I'm not going to fill this all out, but it's pretty simple. You put your information, SSN, if you have a spouse, if you're lucky, primary name, all that stuff. And then your payment, you're paying credit card, debit card. Review it, get your receipt, keep the receipt always, just in case something happens, and you should be golden. Hey guys, I know I'm back in the shirt, but I want to make sure I get some good closing remarks in to make this as clear as possible. The reason we make these estimated payments, and I'm going to do a video just on penalties later, but for the payments for now, the reason we make them is so we can avoid penalties. That's the goal always. You don't want to pay more than you have to ever in life, in tax, in anything. So the way you avoid these penalties is one, if your return shows you owe less than $1,000, then you're good. But two, you pay at least 90% of the tax shown on the return for the taxable year, or 100% of the tax shown on the return of the prior year. So if you have a prior year return and you pay 100% of that amount of what you paid last year, then you're going to be good. If in the case that your income, your AGI was above $150,000, I'm not sure what it was for 2024 because this is old, but if you pay that amount, 110% of that amount, you're going to be good as well. So I'm assuming this is a new business. I don't want to assume that if they had a return, that'd be kind of defeats the purpose of the video. But that's always an option you have. I'm going to make a separate video just on penalties. What is important to know, this is the main reason, the sole reason why we try to avoid these penalties, is why we make these payments is to avoid these penalties. As always, guys, I hope you enjoyed the video. This is Ben from Nader Accountancy. I love learning tax. I love sharing my knowledge and learning more. And these videos help me learn. Hopefully I can teach you guys some stuff too. And let's keep growing together. If you want to get in touch with me to work with me, check the website, contact me, and let's get it going. Thank you.